Hi, I am Ellen Roche from Movement Mortgage. I'm a loan officer and a branch manager.
And my name is Len Foy. I'm a lawyer and the president of Foy Law Office, PLLC.
Hi, I'm Robin Mckeon with McKeon Corcoran Real Estate, broker owner.
I think one of the best pieces of advice for buyers in today's market is know your credit score. That is really, that's going to decide what your interest rate is and what program you're going to end up with. And of course, getting pre-approved. I think that's another, really important factor. Robin, I'm sure when, buyers contact you, that might be the first question, right?
Absolutely. The first thing is have you been pre-approved? Do you know what you're going to feel comfortable spending? Do you know where you want to live? And what are your wants and your needs? And then the next step is, are you ready to pull the trigger right now? And if you are, do you have all your ducks in a row?
Yes. Such great advice. And I'll tell you, another thing is going over the numbers with buyers. A lot of buyers, whether you're a first-time home buyer or a second-time buyer, an investor, buyers want to know what their numbers are.
Absolutely.
And I get this question asked a lot, Len, about title insurance. Can you kind of...
Yeah, title insurance. I mean, there's two different types of title insurance. You've got your lender's title insurance and you have owner's title insurance. So if you're getting a mortgage, then lender's title insurance will be a requirement of the loan. And what we often hear is that the owner's title insurance is optional. I can remember a time, when people were actively talked out of getting owner's title insurance in the interest of keeping their closing costs down or economizing. If we've got one thing to throw overboard to make the load lighter, let's throw that overboard. But title insurance is critically important. And of course, the lender's title insurance is of no help to a homeowner who has a title problem. They don't have any rights under the lender's title insurance policy. So they need their own title insurance to protect their interests.
Absolutely.
So it's optional. We've all been parties to a transaction that's hung up, even with title insurance in place, the bureaucracy involved. But when there is no title insurance, then people are, as we say, SOL.
Exactly. And I've been in situations where the closing gets held up because there's a title issue from years ago. And if they had that owner's title, that extra coverage, then we could close.
Absolutely.
Unfortunately, that's why it's so important to call a closing attorney. Wouldn't you say, Robin?
Well, I think the best thing to do right up front when you're working with a buyer is to have a team in place. I think you have to have the right mortgage person that fits that person and their needs, and you have to have the right closing attorney that can be there and answer their questions. If you have a problem with the home inspection, I always like to give Len a call and say, okay, Len, this is what happened. This is where we are. What do you think? Should we negotiate the price? Should we ask for a repair? Should we ask for a concession? When you have a team put together that fits well, the transaction, no matter what happens, will go smoothly.
Absolutely.
I agree.
Yeah.
I agree. 100%.
Great advice.
Let me throw something out there just in the mixture here. So there's a lot of emphasis on rates. So we hear rate, rate, rate. A lot of people are shopping rates. If I'm approached on that, of course, I'm telling my clients, if I'm the first person they talk to, oftentimes I'm not, but if I am the first person in the team that they speak to, and there's a discussion of rates, I always counsel my clients, yes, the rate is important. You've got to try to get the best price, but don't be fixated on rate at the exclusion of other things like successful underwriting, closing. Let's not forget about that.
Communications,
a good closing experience, a loan officer for life, as opposed to somebody that you found on the internet, here today, gone tomorrow. So why don't you kind of, I'm a prospective borrower. Sell me on working with you as my loan officer.
Absolutely. So I think that one of the things that I offer that a lot of other loan officers may not offer is I am available 24/7, really. And Robin can attest to that. Because
30 years of it.
So, and you have to be. So you've got to be there to answer the phone at any time, to be ready to give that pre-approval, just so they can make an offer in a timely manner. The other thing is because of my wealth of knowledge and years of experience, I can close a loan in 2 weeks if need be. And when you talk about the rate, I mean, it has to be within reason. You need to have a competitive rate. So my rates are very competitive, and you have to be competitive in
Right.
today's market. So, and you're also usually, we're not too much, usually, loan offices or banks are not really that much different on the rates. It
Mhm.
might be maybe an eighth or a quarter off here or there. But it does come down to what is that, that service is key in today's market.
Mhm.
You have to come through. You have to close when you say you're going to close.
And the other thing is right before you write up an offer, before I write up any offer, I get on the phone with Ellen or I have the buyer. I say, Ellen, this is what we're going to be doing. This is what they want to offer. Please go over the numbers because you certainly don't want to write up an offer, get it accepted, and they call Ellen after the fact and they go, oh, no, we can't afford that we can't do that. So I like preparation. So hopefully that there's no surprises
Right.
and we just have smooth sailing through the whole thing.
Yeah, that's
Right.
important.
I agree. And I think that it's all about trying to be sort of like armed and dangerous when you're trying to buy real estate. I think that pre-approval letter, it really becomes, as a buyer, it becomes your ticket to ride.
Right.
And
Exactly.
when I'm working with sellers and I'm working with listing agents and I'll get a phone call, it may not even be about the mortgage. It might be a home inspection question or an MLS question. How do I disclose this property? But I have an offer. I've got a couple of offers. And in the course of kind of vetting those offers, one of the first questions that I'll ask is, who's the pre-approval from? Oh, it's from this bank or it's from this loan officer. Yeah, those people are good. I mean, I'm not signing off on these pre-approval letters, but we've all had that sort of off the wall pre-approval
Right.
letter. Lender we never heard of,
Right.
loan officer from out of town. It can mean trouble, as opposed to dealing with a local loan officer from a local, well-known, trustworthy institution. So I think borrowers would be well served to make sure that they've got a pre-approval letter that really carries a lot of weight and cuts a lot of mustard,
Right.
and people won't scoff at it, right?
And also, you want to make sure that the pre-approval mentions that everything was verified. You want to make sure that paperwork was looked at. And sometimes these pre-approvals are just somebody just writing, a letter saying pre-approved. You want a real pre-approval, not a pre-qualification,
Right.
pre-approval.
And the other thing is, if you get into a multi-offer situation, the benefit of working with me, of my over 40 years of experience and license in Mass and New Hampshire, if you go with someone like Ellen and it's a multi-offer situation, 9 times out of 10, the broker already knows me, knows Ellen, and that will get you over somebody that's going with an out-of-town broker and an out-of-town mortgage person. So like I say, you go in with your best foot forward with a pre-approval and the right team, and 9 times out of 10, you'll get that deal.
I agree. I agree.
too.
People will by default be working with local agents and they'll be working with local attorneys, but they might be tempted into working with a lender on the internet or from out of town.
Absolutely.
And I know we discourage that, as strongly as possible, because we've just seen that backfire, to chase maybe a minor
Right.
reduction in interest rate. They're working with someone out of Tulsa who may never do another transaction in this area again,
Right.
and who isn't accountable to any of us. And if we all crash and burn at the finish line, oh well,
Right.
as opposed to somebody local that has a reputation to protect.
I do think reputation
Exactly.
is key.
And disappears during a transaction, because Len and I have had a couple of that where we literally could not find the mortgage person for a couple of weeks. And, all I can say is, stories we could all tell.
Yep, it's true. It's true. So, Robin, you're on the front lines, obviously. What are you? I mean, I'm always fascinated to know. Okay, we know how things were a month ago and 2 months ago and last year. How are things today? Because things are changing on a daily basis. Are you seeing anything noteworthy to report in terms of changes in the market? More inventory, less inventory, more buyers, less buyers. The animal spirits of buyers and sellers. Are there any changes that are worthy of reporting?
I do see more inventory coming on the market. I do see properties staying on the market a little bit longer. I do see deals falling apart because of home inspections or potentially the buyer isn't qualified. And this is, like I say, I get back to preparation. My sellers, I go over everything with them when we put it on, like what type of buyer would be suited for their property, what we're looking for financing. And with a buyer, when they come to me, once I know what they can do for a program Then we talk about what properties are available to them, because if you're a government buyer, not every property is going to be available for you based on the condition. Or if you're a government buyer buying a condo, is that development passing FHA or VA, which is where my extensive knowledge of condos does. Or if I hit a snag, I'll call Ellen and say, is this an FHA or VA condo? I'll call Len and say, hey, can you help me out with this? And this is all behind the scenes, and this is what you get when you hire us.
Absolutely. Absolutely.
Good stuff.
Very much so. So let me ask you this. So when you're doing a pre-approval letter, back to these pre-approval letters, which are so important, and they're obviously they are a key component to any well-crafted offer. Are you how deeply are you delving into people's finances before you issue that letter? And are you typically putting a range in that letter, like this buyer is good up to a certain amount? I see that sometimes, not all the time. What are your thoughts about how do you put together a pre-approval letter?
Sure. So here's the thing. A buyer dictates a lot of the times what's going to go in that letter, because a buyer might be qualified for a lot more than what they want shown on a letter. That happens a lot. Usually I will tailor that pre-approval letter to be what the amount that buyer wants to offer. And sometimes in a situation, I'll be sending that buyer 2 or 3 different pre-approval letters, because he or she will say, okay, I'm offering this amount, but now negotiations have changed and they've got to offer more. So that's one of those things.
That's a great point, because if you're not working with someone you can get in hold of, you're in a multi-offer situation, and say you had a pre-approval a letter for X, and they came back and countered you and said, okay, if you go to this, and your buyer says yes, and you can't find that mortgage person to give you the updated pre-approval, you're going to lose that deal, You know?
Absolutely.
And so for when I have somebody pre-approved, we have definitely delved into their whole entire past 2-year history. So we're looking at the past 2-year work history. So 2-year W-2s or 2-year tax returns. The guidelines are changing all the time. We want to make sure, the newest thing with Fannie Mae is variable income. So, we just want to make sure that buyer is well qualified and there's not going to be any issues. If there are any issues, we like to address them right away. And same thing, I want to just touch upon the condos. So that is something where we have to make sure that the condo is approved. Not only is the buyer approved, but that condo needs to be approved.
Even before I put a condo on the market, I call up Ellen and I say, hey, Ellen, I'm putting this place on the market. What can we do? Send her over the financial information on it. And she'll say, okay, you need only buyers with 10% down. And that's what I do. I go right to the seller. So this is how we're working it. This is why I'm pricing it the way it is. Can't look at buyers that have less than 10% down. They can have cash. And then, you're walking in the right direction right at that moment, because you're not going to have any problems down the road,
Right, because you want to know everything up front. You want to make sure that everything is taken care of up front. So when that offer is accepted, you're going to get to that closing table. I mean, of course, there's unforeseen things like title issues that could come up.
Of course.
Or problems with an appraisal. Or somebody could even lose their job in the midst of this. But that's another piece of advice I think we should talk about for buyers. One of the worst things a buyer can do is go out during the process and buy a new car.
Or furniture.
Go out and, max out a credit card. So very important. Don't do anything out of the ordinary when you are in the mortgage process. Keep everything status quo. Very important. We've seen that.
Absolutely. So let me ask you this question. So just a couple of questions, again, just for maybe some of our first-time home buyers, or for maybe people that have owned a home before, or maybe been through some things financially, and they have questions about whether they're able to sort of re-enter the marketplace. So if I have a bankruptcy in my past, or a foreclosure in my past, or a short sale in my past, and obviously these things were in great abundance during the last financial meltdown, how does that impact me as a prospective homeowner? How far removed do I need to be from some of those life events?
So with FHA, it's 2 years.
Okay.
Okay. And then with Fannie Mae, it's going to be 4.
From any one of those occurrences.
But that's so much better than in the past.
Of
Yeah,
course.
I mean,
right,
so
right.
much.
7 comes to
Yeah.
mind, so I don't
That's
know.
what
if
I was just
1.0
thinking the same thing. So it's
I
a
don't
good thing you said that.
Well, the other thing in today's world, too, that we have to look at are, modifications.
Mhm.
Sometimes people will have had a modification in the past, and there were guidelines
Right.
that, going forward. So that's another thing we used to see a lot of. In those short sales, we've had that situation in the past where they might not tell you. A buyer might say not tell you that there was a short sale in the past. And a short sale is basically, unfortunately, the same as a foreclosure.
It's true. It's
You
true.
know.
It's giving the creditor less than 100 cents
Yeah,
on the dollar.
right.
So it's essentially
Yeah,
almost like a voluntary surrender of an automobile
Right.
as opposed to a repossession.
yeah,
Kind of the same thing
Right.
from their perspective. It's interesting. I want to get back to some of these lending programs, but this brings us to very fertile territory because we're seeing it a lot, and it's more pertinent to sellers than buyers. So it's
Mhm.
definitely a seller's headache, not a buyer's headache, although it can become a buyer's headache.
Yeah.
So we have the seller that either during the last major financial meltdown
Yeah.
of 08, 09, 10, 11, 12,
Yeah.
or COVID,
yeah,
did go into some kind of a modification program
yeah.
where mortgage payments were either relieved
Uh-huh.
or paused
Yeah.
or reduced and then resumed.
Mhm.
And I think a lot of that is just very confusing to the
Right.
homeowners. They
Yeah.
know that we didn't have to make payments for a while, or our payments went
Yeah.
down. Yeah, we saw something in the mail about another mortgage or a second loan, or you still have to pay back the money. But I think a lot of people, we're all moving at warp speed, and people just are not able to keep track of these details.
Right.
And then they go to sell, and they figure, well, we had a mortgage and we're going to get this amount of money, and maybe we'll even take that money and buy a place down in Florida, and nothing goes wrong until it does.
Right.
And they
right.
find out, well, wait a second, we have a second mortgage or
Right.
another mortgage.
Right.
And sometimes people plead ignorance, and they
Yeah.
and they're completely oblivious as to what's happening. Sometimes the light bulb comes on and people are like, oh yeah, I seem to remember something about that. But just keep in mind, for those people that are within earshot of this video, that if you did have any kind of COVID relief, or you did get any kind of relief during the last major meltdown when
Yeah.
they were trying to keep people out of foreclosure, that money might be lurking around
Oh,
somewhere.
you're going to owe it.
You're going to owe it.
You are going
You're
to
gonna
owe
owe it. It
that
may not have
money.
been accruing interest, but what lenders will do in a situation like that is they will push that to what we call the back end.
Correct.
So basically, they'll take all of this arrearage, this money that you owe the bank,
Yep.
and rather than pushing you into foreclosure or default, they just basically pull it out of the equation. So now you're current again,
Right.
but that money's got to go somewhere.
And
And
it
it either
gets-
goes at the back of the loan or it goes into an entirely new loan behind your first loan.
Yeah. It's a modification.
It is.
And it's owed. It's money that's owed. And this is what happens where now Mr. Seller is going to sell and realizes, oh, I'm not going to get all that money because, oh, yes, I did have this. It was added to that loan balance.
I've seen 3 different scenarios, 4. I've seen scenarios where it's such a whopping amount of money, it kills the transaction.
Mhm.
So now the closing is gone. There is
Right.
no closing.
Yeah.
Thankfully, I don't see a lot of that, but I've seen it
Yeah.
because now a seller goes from getting money to bringing money to the closing, bringing money
Right.
to the closing that they don't have. Now what that seller has to do, and I've seen this done, is they have to go back to the lender and pursue a short sale.
Exactly.
And I've seen that done, and I've seen it done successfully, but it takes time. And we all know that
Right.
time kills deals.
Right.
That's number 1. Number 2, I've seen it reduce the amount of money that a
Mhm.
seller is going to get at closing. And 3, which is not a problem for transaction participants, but becomes a headache for the closing attorney, I've seen it missed.
Right.
And then after the closing, out of the woodwork comes this other lender that says, wait a second, there was a party and we didn't get invited. We're owed money. And I've seen that happen
Well,
twice.
that's why owner's title would come into play.
Absolutely. Owner's
Yeah.
title insurance is critically important because now somebody is
Isn't it a
knocking on your
perfect
door and
example?
saying that there's
Right.
something about that transaction that was not handled correctly,
Right.
and you thought that it was in the rearview mirror, but not quite yet. So
Right.
owner's title insurance is critically
Yeah,
important.
there's a great example.
I want to ask you a lending question, though.
Sure.
I don't want to keep coming back to some of these things, but I've done some closings recently. This is also anecdotal. Sitting down with a veteran, thank you for your service. It comes out, you either see maybe the Marines tattoo or maybe it's a cap or something. Thank you for your service to your country. And then you realize as the closing attorney, they're not getting a VA loan. And I think to myself, maybe you've got another VA loan somewhere. We all know about that restriction. And they'll be like, no, the rates are better on this loan. So can you talk about that? Will it ever
Sure.
be advantageous for a veteran to not go VA?
Yes.
Okay.
Yes, and I'll tell you why. Because a veteran loan, you have to have a VA funding fee.
Okay.
All right. So, and that can vary depending if you're a first-time VA user, or a subsequent user.
Or
But-
disability, right? Can be a factor.
So, but I was just going to say, yeah, if you are disabled, I mean, whether any type of disability, it can be 5%. If you have any type of disability as a veteran, that gets waived. Okay, so let's talk about the rates. The veterans' rates usually are lower, and also there's no PMI. So you can do 100% financing. So why would somebody not go VA? Well, Robin will explain.
I'll explain that. Same with FHA.
Yeah.
You're in a multi-offer situation, and you've got conventional cash, FHA and VA cash wins. It just does. And then conventional comes in next. The thing with FHA and VA, which a lot of people don't know, so when the appraiser comes through, they do somewhat like a home inspection. Some of them are, experienced and go through, and it's not major. Other ones come in and rip the whole house and stuff apart. And then the problem you have is the seller really going to take care of those things if they don't have to, if they can go with another loan? Is the buyer capable to take care of those things? Are they really something that's going to hamper if you go with a conventional buyer or a conventional buyer to buy it? And that's the issue in this market with the FHA and the VAs.
A seller unfortunately, the seller does not want to deal with VA and FHA unless there's no other offers coming in.
Right.
So maybe we're heading into that other market. I don't know. What do you think? What do you guys see right now?
Well, still on this point. So I've seen, again, I get to see a lot of the contracts at the embryonic stage and also finalized. And I've seen language go into contracts involving FHA buyers that just preemptive strike, the seller will not make any repairs mandated by the FHA appraisal. So I've seen sellers try to get out in front of that kind of problem. But I wonder though, back to FHA and VA programs, I wonder how much of this is fact and how much is fiction. Is this urban legend or is there some truth to it? Separating VA from FHA, are these appraisals really more rigorous and troublesome than
Trust
your
me,
standard?
That's basically.
So there's truth in
I
this.
can tell you why.
Okay, there is truth in this.
It's the guidelines. Right. The FHA and VA guidelines they're very strict about health issues, meaning if there's peeling paint before like 1979, they're nervous about the lead paint.
Location of wells.
Exactly.
Shared wells.
Right. Hand railings.
Septic and like if you're buying something close to water, I mean, how many we had that? You go out there and you have to measure between the well and the septic,
It has
and you have to know that up front. So. You're not wasting everybody's time and money.
Absolutely.
Great points. This is fascinating. And so even in a situation where you get three pretty experienced people together, there's still stuff to be learned even between and among us. So your VA buyer that doesn't go VA made essentially a business decision to make their offer more attractive or more palatable by not going VA.
Right. If they had the down payment.
Right. Okay. Right. If VA wasn't their only chance.
Exactly.
Essentially.
So there are still veterans out there where they have to go VA and they're waiting in the wings for the market to change. And,
I don't know if the prices are going to be coming down. I mean, it just seems that they keep going up. I mean, not as hugely as they have in the last couple of years, but I haven't. Yes, do I see some deals where people are getting it for a little bit less than asking? Absolutely. But overall, you got to be prepared to pay. One of the things I wanted to touch on about having a good closing attorney or somebody that you can call up and talk to, similar to what you were saying about the modification, is if you run into an issue with probate.
Oh, yes.
Len and I just did a deal.
We haven't run into any probate.
Which took an extra year to close, and we had 5 different attorneys because it was, but I could call Len and talk to Len, and Len dealing with all these other attorneys, and we had really good co-brokes, and we had good buyers that were willing because they felt that the deals were good. But that really gets down to communication and being able to get a hold. which Len represented the seller in both transactions.
Mhm.
Len, like, where are we going and what are we doing? What can we realistically say for a time frame?
Right.
Because what people don't see is really all the work behind the scenes with the communication between an Ellen or a Len or Len's wife, Julia, you know, that you say, okay, where are we going? How do we do this? How do we keep going forward? Can we still go forward? Or a deal that I had with Len where the mortgage person disappeared for 2 or 3 weeks. We could not get that. The buyer could not, the broker could not, and the deal died, obviously. But I mean, you just have to have a good team.
It's so true. You could take these essentially these two transactions. You might call them twins, or you know, two related transactions, same seller, different buyers, same problem, same condo development. So our client basically purchased two condominiums in the same development back in the 1980s. The same mistake was made in both deeds. And basically, without making this too complicated or getting into tall grass, there was a failure to recite the tenancy in these deeds so that the two parties were treated as tenants in common and not as joint tenants. So that when one of the parties passed, that party's interest in the property had to go through probate and did not immediately revert to the survivor. And that's what brought us into turmoil and probate. And of course, I mean, this really was, this was like an enrichment course for anybody that wanted to find things not to do in real estate, deed mistakes.
And the owner was a realtor. So right there, you know, love him dearly, but it just, you know, that's what happens when one little mistake just goes like this.
Yeah, it's true. It did snowball. And then, of course, you have the probate. And then, of course, we have these professional firms out there, these headhunters, if you want to call them that comb through the probate rolls. And they basically figure out how to track down heirs, interested parties to these probates. And of course, they charge a fee or a finder's fee or a commission of some kind. And of course, we did have people come out of the woodwork, hands stretched out. Pay me, please. And it's fine. They were family members. They were deserving of it. And our client was consented to it ultimately. But I mean, yes, these were difficult transactions. But what I would say anecdotally about, we've all been the parties to difficult transactions. And I can remember once upon a time when I would worry, oh my God, we're doing a transaction. It's not going well. I hope that this agent will use me again. I hope the loan officer will use me again. But all these years later, I find that hard transactions, so long as everybody, you know, pulls their weight, strengthen relationships.
Absolutely.
We come out, we like veterans leaving a battleground. We leave the battleground stronger, stronger than we were when we walked upon said battleground.
Oh my God.
Right? Because we've got the war stories. We had each other's back. We duked it out in the trenches with the common enemy. Which might have been the passage of time or probate or, you know, an angry buyer's agent, whatever it was.
Right.
But I felt that transaction built us up. And even our client was very grateful.
Oh, he was so happy at the end, you know, so happy.
And the gestation period of this transaction was what? It was at least a year, right?
At least.
I mean, a year. I mean, we were all a year older.
and both buyers stayed in it, and both other brokers were great.
Yeah.
You know what I mean? Because they were kept in the loop of everything, and they got it, you know, because they were experienced realtors and understood.
Yeah. That's great.
And that's the bottom line.
Yep.
It's true. It's true. And I love, and we need, and of course, to keep our business filled with people and to keep our numbers up, we need newcomers. We need new market entrants. We need that. Our survival depends upon it. Having said that, it's great to be working with experienced people too. The people that have been around the block, you know, once or twice and have seen a thing or two. That came in awfully handy on these transactions that you and I are talking about, because we all had a lot of poise and grace. Nobody freaked out, and we just did what needed to be done. And we were able to reassure our client that he was in good hands, and reassure the buyer that their interests were being looked after. And again, with that experience comes confidence, and with that confidence comes the ability to build confidence in our clients.
Right, absolutely.
Because they know that they're working, ultimately that they have picked the right people to work with. That's important.
So important.
Here's something I want to ask you, Robin, if I can, because I'm seeing this a lot now, and now it's really going viral. So I'm seeing offers where the buyer's agent is signaling to the listing agent that the that the inspection is for informational purposes only,
Oh,
or with the caveat that it's maybe they don't quite go that far, but they indicate that they won't negotiate items which unless they are in excess of $25,000, whatever it is. And then on cue, there's an inspection and there are further negotiations and there's a price reduction. And I don't even see people balking at it anymore. So if you see that language in an offer, are you almost at the point where you're just disregarding it?
To me, if you're having a home inspection, no matter what you write in for verbiage, you're having a home inspection, you have that out.
Yeah.
And so when a broker tries to explain it to me about what, it's like, then you wouldn't have a home inspection.
Right.
You would need that time frame because that's an automatic out. You have an automatic out. I just had one this morning. They wanted a 2-week time frame for the home inspection. I said, absolutely not. Well, we're going on vacation. We can't get an inspector. I said, well, come back in 2 weeks if it's still available. So now it's 2 days. They got an inspector because I know I could get one to come out. And but I know that there's going to be issues. And I told the seller that. I said, I don't care that they wrote that line because they did. They wrote that line in.
Informational purposes
but
only.
I know there's going to be. So I said, as long as you're fine, they want the property gone. So they're more than willing. I've already set them up that as long as it's not something crazy, that they'll go with it and do that. But yes, I never had one that's another broker's put in for informational only, that it was only for informational only.
Right.
They've always come back and try to negotiate.
Right. And you know what? I'll throw out too, because again, I see it all in I've seen this happen on a couple of transactions. So I think it's worth introducing into this seminar, if you want to call it that. So in Massachusetts, New Hampshire too, but in Massachusetts, I think we have to be a little bit more circumspect because there's a greater likelihood of litigation. People, I don't want to say people are more sophisticated because they're not, but there is a lot of sophisticated, people in Massachusetts and the Commonwealth. So what I've seen it in 2 instances. So it's probably, it's worth talking about. I've seen 2 instances where the buyers have put down substantial deposits with the offer, with an equally substantial deposit to follow with a signed P&S or a second deposit. I've seen it done for 2 different reasons. In one case, I saw it done based strictly on a misunderstanding of the process.
Okay.
The buyer thought that he was, or believed that he was putting down $100,000 at closing, like on the day of closing, like he was going to show up with a certified check for $100,000. So to him, that translated into putting down $100,000 with his offer. Okay. And then another person that I saw did it because they thought that it made their offer more attractive. And so what I would say to those, so 2 different reasons, but both the same situation and both the same reaction. So in both cases, in one case there was a home inspection that was unsatisfactory, and in the other case there was a denial of financing based upon some sort of issues with the condo association, either having not been properly formed or non-warrantable, whatever the case may be. So in both cases, we have a buyer who's legitimately entitled to exit the transaction. One had preserved their right to have a home inspection, and they had absolute discretion to withdraw if they weren't satisfied, and they weren't. And in the other case, we had a mortgage contingency clause that had not lapsed, and we had a denial of financing. Do you know that in both cases, these buyers had to actually lawyer up to get their deposits back? And so what I would say to any buyer within earshot of this video or in our viewing audience is, if you're bringing $200,000 to closing, dealing with the first of the 2, if you're bringing $200,000 to closing, that does not mean that you have to put down $200,000 with your P&S.
See, now that's a great point. So what I do, and I explain to my sellers right up front, that if someone is putting a large deposit down, if they meet their dates and something comes up in a home inspection, or if they don't get financing, they meet the dates, that money goes back to the buyer. You don't get that. It's only if something, fraudulent or something like that. But a good case in point, because Len and I have a deal that the buyer was supposed to be putting a full 5% down, and then they came to the second deposit, and I went over the whole thing and the buyer goes, well, I don't have that money. It's like, okay, but you did when we sat down and we were doing that. But I talked to Len, we talked to the seller, they were fine. The other thing is the buyer was buying the property as is. and there was an issue on one of the floors. It's the multifamily, which we did discuss with the mortgage person, and the mortgage person said that shouldn't be an issue. Well, of course, it came back at the appraisal. I didn't email that to you yet.
I'll look for that email.
But the buyer is going to take care of it because the buyer wants the property that badly.
Yep.
But all those things were addressed right up front, and the buyer had their own lawyer and stuff. But we were able because, Len and I both knew the other lawyer. Len knew the mortgage person. I haven't done a deal with the mortgage person in a while, but we were able to get over these little bumps and just keep going forward.
Yeah.
So
I would say the moral of the story too, in terms of structuring your offer. So even if so first of all, regardless of what you're bringing to closing, accept guidance and coaching from your real estate agent as to what an adequate deposit will be, and don't second guess them. So even though you're bringing $200,000 to closing when you close, that doesn't necessarily mean that should be put down with your signed contract. And it shouldn't, frankly, because it's problematical for a lot of different reasons. But certainly, you should not have a large sum of money going down with the offer. A lot can happen between a signed offer and a signed P&S. Yes, a signed offer is a contract. The Supreme Judicial Court of Massachusetts has ruled on that. But you have to understand, if something does fall apart, or you lose your job, or you have a change of heart, or butterflies, or cold feet, you stand to lose whatever you put down with that offer. But if you want to put down a lot of money and show seriousness, have that large, substantial deposit accompany a signed purchase and sales agreement. And at that point, you're committed to the transaction going forward.
And
don't put that down with your offer.
You got to have releases signed. So if you have an agitated seller, who we all hope has a knowledgeable lawyer, the seller has to understand that you're not going to get the money, no matter how hard you are. If the buyer did everything within their time frames, you have to give the money back, and you want to give the money back so that you can get another buyer.
Right.
Oh,
my advice is always going to be, or frequently, under 99% of the time, I'm going to advise my client to release the deposit so that we can move forward with a new buyer. Now, if the buyer has really been irresponsible, irresponsible to the point where their irresponsibility has caused harm to our client, prevented our client from working with another buyer, we've missed out on a golden opportunity, the season has passed us by, the market has changed, then I think there's a price to be paid for that, and I will try to negotiate that we retain at least a portion of the deposit to make it fair, to cover our expenses. If we've incurred moving expenses, we've had to alter our plans. So there's no question about it. But other than that, short of that, certainly in the case where there isn't that sort of, guilt or wrongdoing on the part of the buyer, I think it makes the most sense to just release the deposit and start over with a new buyer.
Exactly.
I feel like we could do a weekend seminar on inspections, and there wouldn't be enough time. We wouldn't even be able to finish up. But inspections really, do we do an inspection or don't we do inspections? When I show up on the day of closing at the walkthrough, how does the inspection that I did or didn't do have relevance to my final walkthrough? And there are as many misinterpretations as there are interpretations. I've heard an equal number of misinterpretations and misunderstandings. So I feel like there really isn't a Bible on this. But I'll just say, speaking generally, you're my realtor and I'm your client. We're going to buy a piece of property, God willing. What do we do about inspections? And I realize it's property specific, but coach me up on inspections.
Well, as a generalization in this market now, you basically can ask for an inspection unless it's in a multi-offer situation. And then I go over the buyer, and it depends on the buyer. Is this a brand new first-time homeowner that's scared of everything, and Ellen's been on the phone 25 times just to get to the offer? Then I'm going to always say you have to do a home inspection. You have to, because they just don't know anything, and you want to make sure that they're comfortable, and they're probably not going to get that property. But if they're seasoned and they're experienced, I give them the option. I tell them right up front that that will help you be ahead of other people if you don't. But it's always their choice, and I always do that. When I'm selling a property that might be an estate sale and stuff, I always put under the description, property is being sold as is, as seen. You can have your inspection, but I'm telling you up front, they're not going to do anything.
And I think
they don't know anything.
Right.
And that's important, that as is, because we all know that, you don't want to get sued.
Mhm.
And
Exactly.
we've seen that, right?
And we've seen it. And that's why, if you're looking at a property like that and it says in the description, property being sold, as is, as seen, because Ellen and I are working with a client that wants to spend X amount of dollars. I always say to him, call Ellen and see if that's going to pass, appraisal, or you're going to have any issues with financing. He's a very good buyer and he can put a lot of money down, but he wants to stay in a specific price range. And most of the properties he's looking at does need work or something. Mm-hmm. And I say, you got to talk to Ellen because, he is a good guy. You don't want to get him in a position,
right,
that he can't buy it,
Right.
There's no question. And I can tell you that, if you Google real estate attorney, New Hampshire, or even, Merrimack Valley, my name will be up there somewhere and I might get the phone call. I cannot tell you how many people have called me and there's water in the basement or there's some other problem.
Right.
And they're very quick to point out that their real estate agent told them not to get an inspection. And we all know that it's not that simple. I think it's all about just trying to provide people with as much information as possible and let them decide.
Right.
But let them know, listen, if you insist on an inspection, you're going to know something about this property, but you may not own it.
Right.
The
Right,
person that
exactly.
didn't do the inspection will be the person that ultimately owns it.
Right.
With a condo, can we let it slide? I mean, again, we try to avoid,
You try to be. I try to let them always make their own decisions. I will try to give them as much information as possible, so that I hopefully hit all their points and make them comfortable to go forward. But I never tell them that they should or shouldn't do something.
Right.
You have to make it just like Ellen's saying when she does a pre-approval. Yeah, maybe they can afford $1 million, but they only want to spend $600,000.
Right.
I don't care as long as they're comfortable with what the payment is and thing. It's the same with the home inspection. If you want a home inspection, then we're writing up the offer with the home inspection. But I just want you to know that I've already got a head up from the listing agent. There's already 4 or 5 offers in. So is this the highest that you feel the most comfortable with? And when I say that, that doesn't mean they're going to come back and say, will your buyer go up higher?
Right.
So what I would tell you is you come in with your absolute best offer. And if you want a home inspection, you put it in there. We try to do it at, very tight time frame. The same with the closing. I'll always say to Ellen, what's the quickest we can close? What do we need to do to make this so that we can do the absolute best on the offer before we get to the purchase and sale? Because when we get to the purchase and sale, basically almost everything is decided, and Len will draft up the purchase and sale for what was agreed upon. He may also have some suggestions, and we'll always ask him, what do you think? Is this all right? Do we need to add any wording in here to protect whoever he's representing, the seller or the buyer? But you got to put your best foot forward in this market.
Let me ask you, you just reminded me of the appraisal issue that's going on right now.
You read my mind. As you're talking about appraisals, talk about appraisal waivers. Because now all of a sudden that's finding its way into the discussion.
Sure. And here's the thing. So a lot of people will come to me and they'll say, why should I have a home inspection if I'm going to have an appraisal? Very important to know.
Good point.
That they're not the same.
Absolutely.
An appraiser is going to look at what the market value is, not so much the condition of the property. They're going to look for guideline issues like FHA and VA. But if you're going conventional, as long as it's livable, as long as it's habitable, then it's going to pass conventional. But here's the thing is, an appraisal waiver. So a lot of buyers are calling and saying,
and let's just talk about the concern. The concern is that in a market where values seem to be spiraling upward, listing agents are concerned about appraisals not coming in, which could lead into renegotiating the sales price, which listing agents don't want to do and their clients don't want to do. So every listing agent that feels that they got more money than the property is worth is always going to be hyper concerned. Then we move from one anxiety to the next.
Right.
Next anxiety up, is this place going to appraise?
Right.
And so if you come along and say, I can do an appraisal waiver, that's music to everyone's ears.
But
knowing that that's not always, that infrequently you can get that waived.
Well, it has to do with the buyer. It's like you're not going to get a waiver on a 5% down buyer, or sometimes even a 20% down buyer. It comes when you're putting, a buyer is putting a lot of money down.
How much typically?
Like usually more than 25% or more.
Yep.
And they have to also have a good, they have to have a good credit score. Their ratios have to be in play. So it comes from what's called automated underwriting.
Yeah.
We put the information into this software program, and it will come back and say whether this is eligible for a waiver or not. What I've seen from my experience is if the property is $1 million or over, it's not going to get a waiver.
Okay.
It has to be for conforming loans. Okay. But also, if the property has...
Excluding FHA and VA. Appraisal waivers,
right,
not available with those products.
Right, it's Fannie Mae, conventional. Yep. So the other thing that we have to take into consideration is has this property been on the market in the past few years? Because if it hasn't, then the artificial intelligence or whatever is wherever they're getting this value from it's not finding it. So you're not going to get a waiver.
Interesting. So a property that's, say, been in the same family for, and again, I'm just testing the boundaries of this discussion. Yeah. So property's been in the same family for 50 years, but the buyer is putting down, say, 70%.
Say 50%. Say they're putting 50%
no waiver?
Down. Probably not, because there's really no
There's no
record.
data on this property.
Yes,
yeah.
exactly.
No data.
Or if you're looking at being in a competitive offer situation, and I've certainly written up enough of them. So let's just say that you offer $500,000, and your gut tells you that it's probably going to appraise out at $475,000. So you're dealing with a good buyer in the sense of 20% down, or they have some good money. Yeah. I make sure I see their proof of funds of their, first and second deposit, and that they have the proof of funds of the down payment. Then I'll say, I need a copy of proof of funds if we're going to say that the buyer will pay up to $25,000 for what's called an appraisal gap.
I see this a lot.
I need to see proof of funds for that. And I'm writing the offer. The listing agent, if they're really good, are going to ask for all that information anyways, but to make yourself really good. And Ellen and I have done enough of those on that. And that's a sure way of getting the property, because you got that kind of money, the listing agent's going to feel that, it's going to sail right through.
Well, let's talk about that too, because this comes up a lot in regards to this appraisal gap. Most buyers don't know what an appraisal gap is. They'll call me and I'll explain to them, if it doesn't appraise out, you have to come up with that difference.
Right.
So it's important for that buyer to know. So I'll say to them, well, why don't you give a range? Like, you'll go
up to this amount,
up to that amount.
10,000.
Yeah,
that's the number I see a lot.
10,000.
Certainly, there's no rule.
Right. Exactly.
And then I've seen very affluent buyers, but buyers that for their own reasons are getting a mortgage, that have unlimited appraisal gap, which turns a lot of heads. Or buyers that are, and these are all the different permutations that we all run into.
Yeah.
Buyers who are getting financing, and this is another area where I'm going to inject some words of wisdom, because I've seen this backfire a couple of times. Buyers who are getting a mortgage, but who are not making their offer or their contract contingent upon financing. So they're bearing the risk of the loan falling apart, in which case, theoretically, they would forfeit their deposit.
Right. I don't like those deals. Those make me extremely nervous.
Well, I have investors who do that. So they'll say, I'm going to buy this property and I'm cash. Yeah. You know what I mean? And they give me proof of funds, and they've got more than enough money, but they're always getting a mortgage. But they have, a connection with the local.
Hard money loans?
Nope. Some of my big investors had more than enough money to pay 3 times the amount of the property.
Right, so they'll go through the process. If it doesn't work, they'll
do cash. And so they'll like Danvers Savings, Haverhill Bank, Penta, they have, a line of credit with them. Hard money, the problem I see with hard money is usually when they give hard money is when you can't necessarily go through an Ellen or something like that, or you can, but your interest rate's going to be big. It's going to be big on hard money. Is a lot of times when I get that pre-approval, that's it of what they can do. It's not like you can go back and say that they can go up higher. They usually come in with what they absolutely can do. on that. But hard money does appraisals. I haven't yet had a hard money person waive an appraisal.
Well, exactly.
They do, but
Yeah.
they do. I agree with you, and their appraisals can be comprehensive. But also, I think of I can think of one hard money lender out of Boston. Their appraisal basically is like a drive-by. You know, they look at the tax records. They make sure it hasn't burned to the ground.
Exactly.
They're actually lending on a standing existing structure. But I would inject into the discussion here. I've seen this happen a couple of times, and I don't think people are being disingenuous, although that probably happens too. But make sure. My advice would be if you are advertising your offer or your contract as a cash offer and your deposit is subject to forfeit if you don't close, but your actual plan is to get a mortgage, be transparent about that. And I've seen situations and I've seen buyers say legitimately, oh, I didn't think that it made any difference. My deposit's at risk, so what do they care? Well, they care if they don't feel that they've been provided with a full picture of what's happening.
Right.
And it will come to light very quickly because the ink will still be drying on the purchase and sales agreement, and the listing agent will get a phone call from the appraiser.
I know.
Yeah.
And of course, the listing agent will be like, well, you couldn't be talking about my transaction because it's cash. Well, no, it's not. And then, of course, you'll have a range of reaction from fury to, mild pique or irritation. But nobody will be thrilled about it because nobody wants to be hoodwinked or duped.
Exactly.
So I think you have to put your cards on the table and say, listen, my deposit is subject to forfeit if I don't close. I've seen buyers say, I'm getting a mortgage. I've seen buyers say, I want to keep my options open, so I'm going to explore getting a mortgage, but I've got the cash to close without it, and they've got the proof of funds these things are like snowflakes. No two are quite alike.
Right.
But there are some guardrails that I think you need to pay attention to.
Absolutely.
And I don't think listing agents enjoy finding out that there's financing involved in what they thought was a cash transaction.
Right.
So,
right.
One other thing too about the inspections, because again, this is such a fascinating area in terms of molding your offer or trying to make your offer appealing or palatable to the seller. Inspections, I don't know if people are watching a lot of HGTV or people, if this is on the internet or TikTok, but people are getting information from so many different sources. I have a number of clients, seller clients, that are deathly afraid of inspections. And they are absolutely willing to accept, or at least entertain accepting, a lower offer. In some cases, significantly lower, where the buyer is waiving inspection. And I guess I'm an old-fashioned seller. If I sell a property, I fully expect the buyer to do an inspection, and then we'll joust over that.
Right.
I certainly don't fear it, and I'm certainly not categorically opposed to it. Where is this coming from? Where is this angst about home inspections coming from with sellers?
Well, I think with the seller, depending on how well they know their property, if they, like I have one now, if there is going to be an issue with the bathroom because the bathroom needs to be redone. And I believe the reason why they offered what they did so they can come back and renegotiate because it's visual to the eye. So it's not like, to me, the home inspector is not going to find anything that I don't know about the property, but the seller didn't want to put the money in, just wanted to sell the property. So we'll see. And they're willing to be flexible. But I think I don't want to say ignorance, but it's not knowledgeable about why they don't want a home inspection unless they're hiding something.
Right.
And, yes, you do see that occasionally that something comes up in a home inspection. It's hard to believe that the seller didn't know that was an issue.
Right.
But, you try to be understanding and stuff like that.
This is where your agent comes. This is where your agent comes into play, and this is where your agent establishes their value. Get paid, go after. I mean, I'm not trying to dispense legal advice or real estate advice here, but don't fear the home inspection process. It certainly will be an opportunity for the buyer to come back to the well and renegotiate. This is where you will have to negotiate through your agent and negotiate shrewdly through your agent.
Right.
Negotiate your way through that and get through that part of the process and on to the closing.
Yeah.
But I do see a lot of sellers that are spooked by home inspections and they're accepting offers that in other ways are inferior. And in a way, they're really playing into the hands of the buyer that's almost using that as bait. Like, look, I'm not going to do an inspection, but I want concessions elsewhere. I've got a home to sell. I can't close until September, and I'm offering you less money, but I'm not doing an inspection. Oh, that's tempting. Well, what's tempting about that? Take the offer where the guy can close in 30 days. He doesn't have a home to sell, but he wants to do a home inspection.
Exactly.
I mean, that's just, again, I'm not a realtor. I don't play one on television, but I think that's my commonsensical sort of evaluation of that. Don't give up too much
Right.
to that buyer that's dangling that bait in front of you,
Exactly.
right? Would that
Yep.
be your advice as well,
I
Robin?
totally agree with that.
You know,
Right,
don't
exactly.
give away the farm for that. This has been so fascinating, and it's been such a learning experience, I think, for all of us. Do we want to maybe sort of finish up with some sort of closing remarks or closing observations? It's July 2nd. We've
Yeah.
got a major holiday this week. It's almost like take this week out of the calendar. There are only 51 weeks in this year because this week everybody's out to lunch,
Right.
off of work, on vacation, working part-time,
Yeah.
getting started a little early with the festivities, even though
Yep.
July 4th is 2 days away. So it's almost like there's only 51 weeks in this year. But it is July 2nd. We know what the market looks and feels and smells like today. What are some parting observations for our viewing audience about maybe what to expect the next 30, 60, 90 days and beyond? And with an election looming too, by the way. Let's not forget about that.
I think it's important to be looking at the interest rates. I think that we're going to see some, I think we're going to start to see the interest rates coming down.
I do too.
I really
definitely
do.
think that.
And, you know, the data that's coming in, you know, obviously interest rates, nobody really knows, but, you know, they're based on the mortgage-backed securities. And, you know, it's fascinating to see everything that goes into what is driving those interest rates. And when you look and see what's going on in the market, it kind of tells you, okay, you know, we had this conversation earlier, Robin. Open houses. We were seeing open houses where, you know, 20 people are at an open house. We're not seeing those numbers.
Right.
Nope.
And I'm also seeing some of my pre-approved buyers actually getting their offer accepted.
Yay.
Right? So
but listen, you're going to be at one or more cookouts on the 4th of July. I don't know what you've got on your itinerary. You'll at least be at one, and you're only going to get asked 100 times, so I'll get the party started. What are rates going to do?
Right.
As if you could pull your crystal ball out and
but I do
say,
think we're going to see them start to go down.
okay, and then when would be the next follow-up question?
As closer we get to the election,
Yes.
Yeah.
he's going to have to do something
Right.
Yeah.
to get
We're
something.
going to probably buy.
And then, of course, the next question, by how much?
Yeah.
See, I'm that
Yeah.
obnoxious brother-in-law
Yeah.
at the
No.
4th of July party. You see
Yeah.
me coming and you're like, oh my God, who
Yeah.
invited him? But no, those would be the questions. When,
Right.
by how much?
So I personally think that this fall is when I think by September.
I think they're going
I
to go
think
in the fives.
after Labor
Wow.
Day.
Yeah, I do, because
That could be a game changer for everybody.
I think that's going to be great. But the other thing, and you shouldn't say anything about holidays because Ellen will say the same thing. Some of my best deals are on a holiday.
Oh, I don't doubt it.
Get a
I
call
mean, look,
the night
everybody.
before. I just found
Yeah.
this house. Are you
Yeah.
available? Of course I am. You know what I
Well,
mean?
that's the thing. Whenever
I
you
like-
want to go relax, that's
This
when
is
the
when they
phone
call
Hey,
you
starts.
and they
we,
want you.
we own a lake house, and I can tell you the decision to buy a lake house, at least in the abstract, was made on the 4th of July. So I agree. The 4th of July, either people are properly lubricated to make those kinds of
Oh, that's
decisions,
funny. Yeah.
or it's just, you know, you're feeling it, right? The confidence of July 4th. We can do
Yeah.
anything. We can take
And then,
anything
you know,
on.
people like to look at second homes during the holidays.
Well,
Absolutely.
and I'll tell
Absolutely.
one little short story. So way back, this is years ago, I had a converted school on Salem Street in Bradford on the market, and the units weren't selling. This is like 20, 25 years ago. I think it was July 4th or the day before July 4th. We were on a boat ride, my husband and a bunch of our friends, and I was all stressed out because they weren't moving and nothing I did. So my husband says to me, if I sell like 4 of them, there were 6 units. He says, what are you going to do for me? I said, well, I'll take you on vacation wherever you want to go. So in the boat ride down, he talked to our friends and said, you guys need to buy an investment property. You guys never have done this. He sold 4 by the time we hit Michael's Harborside on the day before July 4th. And yes, I took him on a vacation. And I ended up buying one. So actually we sold 5. So,
I love it.
you know,
I love it. I agree.
use that moment of alcohol.
No, I'm telling you, here I am. I'm talking about 51 weeks of the year. Now, I'm not referring to our industry. I think in the real estate business, we're working like there's
24/7.
there's no tomorrow.
Yep.
But the rest of the world took the week
Exactly,
off. But
yeah.
no, we're still business as usual. This would be my parting shot as the lawyer. I can remember so many times at the closing table when my client would needle me and say, oh, $1,500 for the lawyer that I didn't even need. And of course, I'd sort of grind my teeth at that. My advice to anyone who's contemplating, who's on the bubble Of course, if you're using a lender, your lender will retain an attorney, and that attorney might pinch hit for you throughout the transaction. But certainly, if you are a seller, and by the way, that includes New Hampshire, where buyers and sellers were always resolute that they didn't need a lawyer. That was the last thing they needed.
Right.
We have entered a new era of real estate that has become incredibly legalistic.
Right. Absolutely.
And adequately litigated. I mean, it's use in occupancy agreements on almost every deal. It's indemnification. I just did a transaction where the buyers wanted to go in and clean before the closing, New Hampshire transaction, so everybody's kind of got their guard down. And my seller's agent had suggested that they do it or that they go along with it, and I think it's a decent thing to do. It's the right thing to do.
Right.
Can we just go ahead and do it? No.
Right.
We should have an indemnification agreement.
Yeah.
What if one of the cleaners goes in there before the closing and gets hurt?
Right.
Who do they sue?
Right.
The
Exactly.
new owner, or do they sue us?
Right.
Exactly.
Still our house, right? So so we're in that kind of market where people, maybe buyers have been looking for a property for 3 years. They're ticked.
Right.
They're not happy campers. I mean, they're grateful they finally found a place, but they started their looking around
Right.
3 years
Yep.
ago.
Yeah.
You know, it was
Got
a
a few of
different.
those, yeah.
So they're surly. So I think that it's very important to make a pitch for my own profession and my own services. I think you should have a lawyer if you are buying or selling
I
real
agree.
estate in New
Absolutely.
Hampshire or
Yeah.
Massachusetts, period, end of sentence,
Right.
new paragraph.
And you want that purchase and sales to be reviewed before you sign it.
Yes.
You know, you
Absolutely.
have
New Hampshire too.
Yes.
Again, New Hampshire's always been,
Right.
we don't need lawyers,
Yeah.
title companies. I get
But
it. We
you
have a title
do,
company
right.
too. But we have legal disputes. We
There's-
have litigation. We have courthouses in New Hampshire.
Right.
We have that.
And here's a good reason why. There's these important dates during the process that they're crucial.
Mhm.
You know, you have the, how many days to sign an application. Then you have the commitment date. And then you also have the closing disclosure date.
Mhm.
And you should have an attorney, the closing attorney should be going over that CD and making sure that it's, something acceptable for everyone. So there's no nightmare. So it's so important to have that attorney throughout the process, making sure that those dates are met.
I agree. I mean, I think what's coming out of this, webinar or this webcast is pick your team very
Yeah.
carefully. Go with integrity, go with compassion, go with experience, go with knowledge, go with intelligence,
Absolutely.
go with passion, go with those things.
Yeah.
And
100%.
just to close out again, thank you very much for watching
Yeah.
our video this afternoon.
Thank
My
you.
name is Len Foy. I'm a real estate attorney with offices in Nashua, New Hampshire and Methuen, Massachusetts. I'm with Foy Law Office. We have Sunset Settlement Company, which is our title company. We pride ourselves on customer service. Almost 30 years of practicing law, so I've got a fair amount of experience. And to my co-hosts, please.
Ellen Roche from Movement Mortgage. And yes, this was wonderful. Thank you, Len. Thank you, Robin. And I guess my parting words for this are Happy 4th of July.
Indeed. Happy 4th.
I'm Robin Mckeon with McKeon Corcoran Real Estate, licensed in both Mass and New Hampshire, the owner broker.
We're going to have to talk with all these